Over the years, I developed an 8-step research process to help you have a template and a way of thinking about how to approach ideas. How do you do due diligence? And I'm very excited to share this with you, okay? So again, it's 8 steps. And the first couple steps, the first steps 1 to 3, are sector-specific steps, top down. And then steps 4 to 8 are company-specific steps. That's bottoms-up analysis. And I'm going to run through all this in great detail for you. And I'm going to give you a couple of templates you can take with you and complete yourself. Okay, cool. So here is the 8-step research process. So let me kick it off with step number 1. The first step is you select the secular growth sector or cyclical growth or declining market. What I mean by that is pick the sector you love from a high-level perspective. If you love Amazon Web Services and cloud computing, then start doing research on the cloud sector from a high-level perspective. Who are the players? Same thing with the cyclical market on the long side or short side. Check out if you've got the Olympics coming up in whatever country it might be years from now. That could be a cyclical growth market, or it could be a growth in decline, like the airplane market or the engineering construction market in recessions, right? So those are great short ideas from a market top-down perspective. Okay. Number 2. Next up, we've got research the drivers and risks of that particular sector. And I'll give you examples of all this stuff later. So every sector and every company you invest in has a driver. One thing that makes the stock go up or down. Find out what that is, right? So for software companies, it might be the announcement of a new product, like Microsoft Windows or whatever it might be. For Apple, it could be a new iPhone. That's a driver. Understand the risks as well. And as we showed in the modeling section, you can go to sec.gov and look in the 10K and find out risks for any company out there. By law, they have to disclose all of them. Okay. So we're still looking at the sector, though, high level. And we can look at the risks of all the big companies in that sector and the drivers, just so we can better understand what type of investment we might be looking at when we do bottoms up. Okay, cool. Next up, we have got select the winners and the losers in that sector, okay? So in the cloud computing market, the winners might be companies like Salesforce.com and Amazon.com. And the losers might be companies that have antiquated technology offerings that are not cloud-based, like a Long Island, New York-based company called Computer Associates. And once you select the winners and the losers, per the video I showed you before with Pam talking to Horatio, her analyst, look at fundamentals first, valuation second, and then you need a catalyst. Then you can look at technicals. And don't worry if this stuff doesn't really resonate with you. I'm going to give you many examples of what technicals are and valuation, etc. later. All right, cool. So after number 3, now we're going to do top down. You have to try the product. Please try the product. And if you don't try the product, talk to your friends that have tried the product or find people that have tried the product, right? And so with LinkedIn, for example, when I was doing due diligence on the company, of course, I tried it. Not only was I a LinkedIn user, but I also tried to see if I could use their marketing product to try to get customers, that sort of thing. And you don't have to pay for it. You can usually beta test or just test these things for free initially. Try the product always, and always do your own research. Never, ever rely on anybody. Careful with the television as well, because when people are interviewed about stocks, they have a bias. They usually own the stocks, or there's some reason why they like the stock or don't. Okay, cool. Next up, review the 10Q and 10Ks and the transcripts. In the United States, you can go to sec.gov and review quarterly earnings documents called the 10Q, or annual ones called the 10Ks. And if the company has gone public within the last couple of years, you can always pull up what's called the S1 or the S-1, which is an awesome document. It's got a ton of information on the company, including all the risks, who the management team is, yada, yada, all that good stuff. And of course, the financials as well. And in other countries, they have similar setups. In Canada, they've got Cedar. And in other countries, they have their own government-related websites. Okay, cool. Next up, we've got build and maintain your financial model. Isn't it amazing how we haven't even talked about the talking to the company yet? You don't want to do that yet. So CEOs and CFOs are the best salespeople in the world. Don't talk to them until you've done all your research and you have questions. Otherwise, they'll make you too positive on the company and they'll bias your research. Speaking from experience, that happened to me many, many times. Okay, so step 6 is you're going to build and maintain your financial model. And we covered how to model in the last section. Now, every company is different when you model, okay? And you want to spend as much time as possible on modeling revenue because when you're modeling the future, most line items are just a percent of revenue. Okay, cool. Next up, we've got step 7, which, we're going to interview the CFO and CEO here. This is towards the end of our investment analysis process. And again, you wait until towards the end to interview them because they are awesome salespeople, right? They got to that level because they're great salespeople. Just like at law firms or investment banks, if you're a partner, you're basically a salesperson. Same thing can be said in consulting. If you're a partner, you're a salesperson, right? CEOs and CFOs got to the top because they're great salespeople. All right, cool. The last step is establish a fair value and position thesis. And I'm going to show you a template in a minute or so that you can fill out yourself, which will help you to structure and crystallize your logic. In terms of fair value, we covered valuation in the previous section as well. Every sector has different ways to value companies, right? Or different drivers. And so in the technology sector, I love to look at price earnings and price to revenue. In other sectors, you might look at discounted cash flow or EBITDA multiples. So here's the template I was talking about. Let's go through this, right? And I'll give this to you in PowerPoint format. And then what you can do is save it as a PDF. And I promise you, if you bring these templates to a hedge fund interview or show your portfolio manager, if you're an analyst at a hedge fund right now, they'll be impressed because it shows you can structure all of your logic on one page. And for those interested in the mutual fund sector or any other investing sector, you can make these as well. But if you're doing this outside of tech, get rid of technicals, okay? Because people outside of tech don't like this stuff. And I'll explain what that means later. But let's go through this quickly, okay? Up here, you put the date, obviously. You say here, is it a buy or sell idea or long or short idea? And what's your price target right there? Then you fill out very basic stuff like what's the market cap, the price, the 52-week high-low, the beta, the yield. And you can get all this stuff online for free at Yahoo Finance. You don't have to pay a lot of money for Bloomberg, okay? All right. And then the geography, percent of revenue. I always love to look at this as well to see where the incremental growth is coming from. If it's an American-based company, usually the incremental growth is coming from Asia and to a lesser extent, Europe. And then here you're going to put the current quarter guidance that the company gave you. And then here on the fundamental side or the qualitative side, you're going to put what is the catalyst? What is the raison d'être or the reason that we're involved in this stock to begin with, right? And so again, a catalyst can be something like a new movie's coming out or Grand Theft Auto is coming out for Take-Two or the Beijing Olympics, right? And over here, discuss who the competition is quickly, right? How they distribute their products, where they produce them, etc. Talk about the management team a little bit here, where they came from, have they been successful in the past, and then list the risks here. And you can find a lot of risks in the 10K. In fact, if you talk to a competing company to the one you're doing research on, ask them, what are the weaknesses with that other company? And they'll be happy to tell you everything. All right, and here's where you kind of talk about revenue growth and earnings growth for the year and for the current quarter, whatever that might be. And then what's the bottom line message? What is the fundamental bottom line? Expect the catalyst on this date, entering new markets, that sort of thing. And then technicals, I'm going to talk about that in a little while, and it becomes self-fulfilling, and traders love this stuff. Again, outside the hedge fund industry, don't mention this stuff. People will get upset with you. I'll explain why later. And then on the valuation side, you talk about what's valuation this year versus the S&P, right? Based on your numbers only. And next year versus the S&P, right? And you can talk about what the competition is trading at here. And then you always mention what the earnings growth is here versus the S&P, that sort of thing. And then you list the bottom line here. Again, I'm going to include a sample of several of the ideas written up by myself years ago. And I'm also going to give you a blank version of this template that you can write up yourself. And I promise you, if you bring these to interviews or meetings and keep them in your bag and pull them out when they ask you what investment ideas do you have, they will be impressed. In fact, when you interview with a hedge fund or a mutual fund or any type of investment management company, check out what the top 5 holdings are on the long side for the mutual fund or the hedge fund. And you can do this online at sec.gov, okay? and bring these write-ups in your bag, right? For the top 5 positions they have. And when they ask you your thoughts on certain companies, they usually ask you ones they own, pull it out. You'll impress the hell out of them. I've done this before, and this is what got me a couple jobs at a couple of great hedge funds. Every battle is won before it's been fought. I know that's a cliche, but if you keep these handy in your bag, in your arsenal, then you'll go far.